Good morning. Welcome to Trading Hour. I am Reema Tendulkar. With me is Prashant Nair in the red for the fourth consecutive session for the benchmark indices, but we're off from the lows. So the Nifty has recovered about 35 points from its early morning lows, while the mid-cap index is now almost trying to get back into the green. So that's seen a recovery of more than 100 points from the lows. The big story today is, of course, the big rise that we've seen across commodity stocks. So Hindalco, JSW Steel, Tata Steel, these are the top three Nifty gainers today, with a gain of close to about 2 to 5% Updates on your screen with respect to the future Amazon case. But let's get back to the story about rising commodity prices. And in that, we're putting the spotlight on copper prices because they're on the rise and they are at the highest level that we've seen in the last decade. So what's driving this up move? Where are prices headed? Prashant is here with an analysis. Prashant, hi.
Thanks very much for that. Copper is looking absolutely on fire, super bullish, incredibly bullish, just looking at the prices themselves. And, the main two international commodities exchanges where copper is traded and other base metals are traded is the COMEX and, of course, the London Metal Exchange as well. So we're looking at price analysis from the COMEX. What is new? What is exactly... copper has been in an uptrend for the last 6 months, but what exactly is new? This is what is new. Copper on Friday took out its 76.4% Fibonacci retracement of the 2010 all-time highs. And I'll explain this in terms of, the graph which will come up on your screen. This is basically what I'm talking about. This is the copper price, as I said, from the COMEX. These are in dollar per 100 pounds, all the way from 2007, 2008, which is the financial crisis, 2010, which was the all-time high for copper. And then, we come all the way to the lows. The lows were somewhere between 2014 and 15. And then we are basically in 20. That's the March correction, which we saw right at the end. And then 2021. So this is basically the picture out there. Now, what has happened? If you draw a retracement, a Fibonacci retracement analysis from the 2010 high all the way to the lows of mid-2014 or so, as of Friday, you've basically taken out on copper prices the 76.4% retracement. And this is basically what is new and why we are refocusing on copper prices once again. And I think the market is taking note of this as well. So that's the technical picture out there, right? But it's not just technical. It's a very fundamental story. Remember, copper is known as Dr. Copper, right? The reason is because it's known to kind of mimic what the economy is doing. Some say it even sort of leads the economy and tells what the economy is doing. Is the economy going to expand? Is it going to contract? And copper prices, because it is used in so many industries, so much industrial use, it is supposed to tell you that. So Dr. Copper is clearly in a bull market. Let me sort of run you through not just the very latest factors, but some of the more important fundamental factors as well. First, China returned from its Lunar New Year holidays. There is a burst of onshore China-related buying, which is very visible on exchanges around the world, especially the Shanghai exchange. Inventory build-up has been very, very limited. It connects back to what we sort of explained about 2 weeks back, which is that China isn't taking a holiday. Factories are humming, and that's the reason why typically when China goes on a holiday, inventory levels rise, which has not been the case this time. Copper stocks in the first quarter, that is January to March, so far are on track to see the biggest draw all the way back since 2004. That's pretty large. Let's move on to the next plate here. Many global banks are forecasting that basically in 2021 we will have the largest deficit in copper stocks in at least 10 years. Over 300 kilotons is the deficit, which many are around that figure, over that figure. Demand in China and other key Western markets remains quite robust despite rising prices. That's the other point. And now let's come to the supply side of things, right? This is all demand. What about supply? Large producers like Chile and Peru, and latest data from those countries shows a very sharp year-on-year fall in exports, copper exports. There is also, there has been no big announcement of a large copper project, mining project, which has come about so far. At least for the last 6 months, certainly not in 2021 so far. Maybe rising prices will incentivize players to invest and increase copper production. That's typically how things pan out. The other interesting thing is this entire going green, right? The world is moving towards renewable energy, and that is copper intensive. This is decarbonization, so as to speak. And there are 4 things which I'm listing here, which I think will drive some of the largest amount of copper consumption. There is the renewable power generation, there is battery storage, there are electric vehicles, there are charging stations and related grid infrastructure. This basically will lead to a fair bit of copper consumption. Just to give you an example, if you look at electric vehicles, right? Electric vehicles are still small. I mean, they get a lot of coverage and hype, but they're still very small as a percentage of the total global auto market. But a typical battery-powered electric vehicle contains 83 kilos of copper, which is about nearly 4 times the copper which is contained in a normal internal combustion engine, which is petrol or diesel powered. In a similar way, a hybrid car contains about 60 kgs of copper, which is over 2.5 times, which is contained in an average car, in a petrol or diesel car. So, this is what we're talking about. Now, just to put things in perspective as to how large a driver the going green theme can be for copper, Citi estimates that presently, this is essentially the going green, decarbonization related consumption, only accounts for about 15 to 20% of the total consumption worldwide. This is expected to grow exponentially. So they say, even though, if the economy slumps, demand from traditional sources will slump, the world is moving towards sort of decarbonization, renewables, and that will keep copper prices pretty well bid. Back to you.
Thanks, Prashant. Very, very comprehensive analysis on what is driving this big copper prices. And you spoke about Citi. Goldman Sachs too came out with a report 2 days ago, and they've given a target price on the LME copper price, which has surged past $9,000 today, and they've put a 12-month target price at $10,500 for LME copper. Jonathan Barrett, CIO of Probus Securities, and Amit Dixit of Edelweiss join us on the phone line to dissect the up move, the way from here, both globally as well as for the domestic markets. Jonathan, first to you. Are you getting a sense that this rally is approaching maturity? What is your forecast for the next one year?
Yes, good morning. Look, I think that was a very concise summary from your colleague on what's happening in the copper market, because it does hold a lot of weight that this rally is just about to start. Although we've seen it already there, but it certainly we're way into that discussion of what are the add values to keep this rally moving. And I think one of the big ones we have is that lack of supply into a market that is being stimulated, continually being stimulated. Biden's comments over the weekend about more stimulus. All this requires infrastructure. It's those infrastructure programs which last for some time in a market which is, if forecast to be in a deficit, will keep prices higher. Remember, we are in a backwardation at the moment, and that suggests that prices will remain relatively solid.
And how long do you think the markets will remain in a tight supply situation globally? What is the extent of the tightness or the shortage of supply currently? And what is the forecast?
Yeah, when we look at it, when we look at that supply, this supply shortage could last anywhere up to half a year, 6 months. We look at the backwardation in the market. You can easily look at those September 2011 highs of 10,000, 10,500. If more stimulus continues, you can see it actually pushing through those levels. So yes, the big question we're all asking ourselves, are we in the super cycle? Is this just another kick on? And will prices go even higher than that? So far, the macros are suggesting we can reach those levels and go through them.
Reach those levels and go through them. Gentlemen, thanks very much for joining us, Jonathan and Amit. Prashant here. Amit, your thoughts, you've been listening in to the copper conversation. What's your own sense? Jonathan sort of threw in the word super cycle. Should we talk in those terms? What's your overall assessment?
So, talking typically of copper, if you look at it, I agree with your views about the supply being constrained, and two things happening simultaneously. One thing is China, particularly after New Year, is totally relentless in terms of the manufacturing growth. So the data, if you look at the new loans issued, even if you look at home appliances sale or even auto sale, everything is on a fast gear. So demand side, at least from China, I don't think there is a concern in near term. talking about supply, look at the commentary of both Glencore and Rio Tinto, and you will realize that supply side, both of them are pretty circumspect, because Peru and Chile, the two countries that account for a large amount of copper production, are still battling COVID-19. So clearly supply side support is there. The third dynamics here is the stocks. So if you look at LME stocks, they are quite low, despite Chinese stocks rising in the recent times, but these are very small of the overall proportion. So I would say that fundamentals for copper looks quite interesting, quite solid. In terms of our own stocks that we have, well, they are more tuned to TCRC per se. So we have to be a little bit discerning over here. So this high level of LME price would possibly benefit only Hindustan Copper, incidentally a stock that we don't have under formal coverage. But Hindalco and Vedanta, I don't see any impact, because TCRC margins, typically when supply remains constrained, TCRC margins also remain quite low. So not from that perspective, but Hindalco and Vedanta are rallying because of the general rally in other base metals.
Oh, well, that's an important point, and I think we made that distinction earlier as well. My colleague Nigel was talking about how Indian sort of companies are largely exposed to the refining cycle. So prices going up benefits producers, and that's Hindustan Copper, but I don't think there's any sell-side coverage. As Amit pointed out, they also don't have any coverage there. Amit, in terms of usage, again, something we put out 2 months back, a month and a half back, which is rising raw material prices. What will it do to Copper India's margins? I mean, in terms of just talking about copper, but it's not just copper, right? Aluminum, nickel, zinc, I mean, they're all looking very, very strong. What is your sense? The industries which are the biggest users of copper, and what is the impact likely to be?
See, I don't cover consumer durables particularly. I mean, formally, at least my colleagues cover that. So definitely on cost side, that is going to impact them. Aluminium is going to impact any power generation company. In terms of my coverage, metals and mining, I would say that, it is quite positive for all the non-ferrous guys. So Vedanta being, of course, the base metals conglomerate, you will find the benefits quite a bit over there. In terms of adverse impact, well, the user industry definitely would be impacted in near term. So you can talk about consumer durables, you can talk about power generation, you can talk about autos. Everybody would be impacted, definitely. But this is not something that is very limited to Indian side. It's all global at the end of the day, particularly on non-ferrous front. So there is no way you can apply any sort of control to it. I mean, this is at the end of the day a global rally, so can't do anything about it. And with Chinese demand remaining strong and expected to remain strong at least for next couple of quarters, I do see that at least for metal stocks there is a bit more way to go.
Amit, India is currently a net importer of copper on the back of the fact that Vedanta's 4 lakh ton copper smelting facility, is shut, and it's still, pending resumption. What is the update on that? When should we expect the Vedanta facility to come up on stream?
The matter is still sub judice, so won't like to comment on that. But India was net importer even before, even when Vedanta was operating. Because in India, we don't have a lot of smelting facility. First of all, Hindustan Copper has not been able to expand its mining capacity or even smelting capacity. So India, we had a share of imports quite a bit earlier also. So it's not something very new, but with Vedanta definitely going offboard, we have got the imports have definitely increased.
Okay, Amit, it's a pleasure. Jonathan, thank you very much for joining us with the global perspective there as well. Appreciate it, gentlemen. Thanks indeed. So that's basically copper in under focus right now. Price is looking extremely strong. Markets have come off. I mean, we're down about 100.